So, hello everybody. Welcome to another live stream at our Mint Markets channel. Just had to set up the live stream up again because of screen sharing issue, but I think now everything can be seen and heard well, hopefully. Let me just check if we are in fact live, because I don't want to talk into empty space. Can't see anything yet, but I think we're online. And what I want to do is share the link real quickly as well. Once I can see the link on my channel. Perfect. Now we're good, I guess. Just give me a second. I hope the quality and the stream rate is good as well, because I'm in a different Wi-Fi today, which seems to be a little bit slower, at least on my computer. And let me just post the link real quick on our I hope Twitter the quality page. And the stream rate is good as well, because I'm in a different Wi-Fi today, which seems to be a little bit slower, at least on my computer. And let me just post the link real quick on our... All right, let's start with the economic calendar. That's one of the most important things I go through in the analysis. We have non-farm payroll Friday today. So I want to make sure that if we take potential trades, the best days are Monday, Tuesday, and Wednesday morning. I personally don't take any trades after Wednesday morning. I wait till non-farm payroll is over, and I join in again after non-farm payroll event has been released. So because the days from Wednesday to Friday, usually before non-farm payroll, it's very choppy and it's not the best high probability setups. Today we have no high probability market drivers. We have just factory orders, which is a low impact news driver. So at 4 p.m. so nothing really too crazy, and we will see what we get. We had my higher time frame target hit yesterday on Friday, which was the exact high of the shaded area here, which was 4598. We hit that yesterday on Friday, and we retraced in today's morning session rather handsomely. I wish I would have been in this move, but I slept in, so I didn't trade it. Let me just outline real quick what I would have traded if I had been in front of the chart. What I would have liked is the fair value gap here at Monday 0 o'clock, and I extended out, and we had a nice, in the London session we had a nice trade entry at 345. So of course it's hindsight, but this would have been a nice trade entry, aiming for lower prices. And I would my target on the downside is this low here, 4562.5. We fell just short of it before the market opening here. I still think we made equal highs here. We might see a retracement, but I still think that this here, the red line, is a potential draw on liquidity at the later point in time, maybe today's session. That's what I would be looking for. Let's outline the liquidity real quick. So where is the near-term liquidity on the up and on the downside? What I'm looking is the high above here. So that's our most recent buy side liquidity. Stops are here. People who are short have their stops here. Nothing really changing there. On the 1 hour chart, we have our liquidity, our swing high, which is 3 candles, one in the middle, one on the left and one on the right. Here would be above here, and we have sell side liquidity here at 4562.5 and buy side liquidity at 4589 and even higher at 4594. I think the sell side liquidity is the most reasonable target, so I think it's more likely that we see a downside than upside today, because we have taken out the 1 hour high here from Wednesday 9 o'clock. On Friday we had a shift in market structure here on a lower time frame, and we have traded in a daily fair value gap, which I outlined last week in our stream. So we had here buy side liquidity above this daily candle here at 4582.75. The high is 4597.5. So I outlined that last week in our stream. So that was my target, and we have also the gap here, the daily gap, which is shaded with this purple area. And I think we saw a retracement here. So because of this, doesn't mean that we have reached the high yet. So it's not calling the high here. But I think the next reasonable draw is the downside in terms of liquidity. We can still go higher medium term, so not saying that this is the absolute high. If we resume going higher, daily target can be the midpoint of this fair value gap shaded here, which is 4623.75. So that would be next logical upside target if we in fact resume higher again. And the reason why I'm careful at this point is because we have taken out the high, as outlined already, here at 4598, and if we don't hold strength here, if we don't stay at this high here and resume higher, then we might potentially go back into this range. And let me outline this range real quickly so that you know what I mean. So we have a range here from 4122.5 to our high from Friday, and we might, if we don't stay strong here above this high, we might see a retracement into the 50% level again. So if we have a significant break in market structure lower, that could be a potential target, which we have to observe. 4364.2.5, but that's too early to say. So I'm still focusing on the buy side just because I don't want to pick tops and bottoms. I stay with the buyers until proven otherwise. So as long as we don't have a significant drop in market structure and really prove that we are resuming lower, I'm holding my bias with a light bullish view here. We have also closed above this discount level of this daily fair value gap. So this indicates that we're not done yet, that we might go a little bit higher still. But I think we are in a slightly bullish environment with in consolidation seek and destroy mode, because we see a lot of highs and lows being taken out recently. So there's always liquidity in jeopardy and stops are being taken. So we have to be very careful, and I think we should not have a bias that is too strong here. We should focus on intraday liquidity and be nimble. And let's see if we can find a setup here today, targeting the stops here at 4562.75. We have a lot of fair value gaps here because of the down move today. So we have a fair value gap here. So the downside candle here with no price action to the left and to the right, right next to it. And we even touched the higher gap here, also on the 15-minute chart. Let's just draw it out till 11 o'clock. 11 o'clock New York time, and the liquidity still remaining is here, and I will annotate it real quick. So we have sell side liquidity right here below this low. I think this is the more likely draw, but we also have buy side liquidity here. So we should not, to be bearish, we should not see this high broken here. So as long as this high here at 4588 stays intact, I stay with my bias and think we will take this liquidity out here. We had another fair value gap here, another potential entry. Just for annotation's sake. So this is also a fair value gap that should ideally hold price below if we want in fact run the sell side liquidity out. And here, just for clarity's sake, these two blue lines is the new weak opening gap. So I annotated here using regular trading hours. The regular trading hours we use to annotate our new opening range gap. We will do that right away. So we had our last opening was on Friday, and now the market opening from Monday at 9:30. So the lack of trading between Friday and Monday, we will annotate the gap here, and this is our opening range gap from today. So we take the last price from Friday and we opened up here. Let's draw it out. So pretty huge opening range gap. And once we have annotated, we can go back to the electronic trading hours to see more price action. And we can see, so this shaded area here is our opening range gap. And let's draw it out till the end of today's trading session. So we don't need it any further than this at the moment. And we can see that we are right on the bottom of this gap at the moment. We have, after 9:30, we have opened, we have retraced a little bit into it. It's about the lower quarter here. And now we are back to the low, the discount array of this opening range gap. And I will take this red line away and I will measure the 50% level of the opening range gap just to get my support and resistance level here. Again, the new range opening gap can act as support, resistance, and draw on liquidity, and the 50% level, so the half of this opening range gap, is influential as well for price. So I want to see if we stay below there or close above there. That gives me indication if we go lower, if we resume lower, or maybe reverse higher. And to finish our annotations up, I'm still need to draw our, oops. Okay, I think I should move my computer. I want to annotate the midnight price, New York's midnight price. on the 5-minute chart. And that's right here. And then I also wanna note the 8:30 opening price, but I don't need to do it here because I see the 8:30 price is exactly the midpoint of our opening range gap, so it's the red line we already have. We don't need to draw some extra lines here. At the moment it still looks like it draws to our liquidity target here. Let's see how many handles we have there. So it's just around 4 to 5 handles, so not too much. A little bit, not too much to take a trade. Potential trade entry I missed would be here, the 5-minute fair value gap. So here from 4 starting here. So the red downside candle with no price action immediately to the left or to the right. That 5-minute gap here, we could have entered here, and we would have had a 9-handle drawn liquidity here, so that would have been a nice setup. That we missed that, unfortunately. Yeah, and our liquidity target is hit. So the level I wanted to see, the draw for today's session, the highest probability draw of the session just got hit. So we were not able to participate in a trade, but at least our directional call was right. So even though it was not a lot, it's 10 handles. 10 handles is enough for a day trade for me. So nice to see that what we expected unfolded just. And what I want to see now is, since the session's not done yet, what I want to see now, if we have strength if we have weakness on the downside, if price wants to stay below this red line, if it wants to continue lower and doesn't reject here and goes back into the opening range gap or above the lows we just took out. So that's what I'm observing. I want to see price stay heavy. I want to see closing candles below or at or below this lows we just took out here at 4562, and see if we can go lower and take out some further sell side liquidity. The next potential sell side liquidity is here. Let me remove the annotations here so that you get a better view. So we don't need these annotations here anymore. So we have just reached into this gap. So if I would have taken a short here, I would have taken off most of the position now, because we might face a potential, we have the probability to face a potential reversal here at some point. However, if we stay strong, we have more sell side liquidity here below this low. So if we stay strong, if we close below, at the moment it looks heavy, that's nice to see. We have the next sell side liquidity here at 4550.25. Let's take the low hanging fruit, which is approximately the midpoint of this wick here. So if we stay here, I want to look for 4551.50. At the moment it looks like we're going lower. Let's see if this fair value gap here, what I drew out from 4561.25 to 4557, if this acts as support or resistance. If we trade through this gap and come back into that potential short scenario, if we stay here and don't close completely in, for example, if we stay here and reverse, that's a potential resistance level. I'm watching how price reacts in this gap, which is also a bullish order block, as ICT calls it. So the downside candle before this up move. We have another support level at the 50% level of this downside candle. So I'm taking these two down close candles before the up moves. I'm taking this, I measure it from the high to the low, and what I'm doing is I'm annotating the 50% level here, and I want to see how price reacts there. If price holds, if price stays above this level here, or if price goes below, closes below, that's a further indication that we're in fact going lower here. So very nice downside move so far. Also missed that, but on the 15-minute time frame we would have had a nice potential trade entry here at this fair value gap, and even a better one, even a higher one at this fair value gap here. However, I was too busy with starting the stream and doing all the higher time frame analysis, and I missed these setups today, which is unfortunate, but can happen. Now I want to see how price reacts at this mean threshold of the bullish order block and this fair value gap here. But so far I like that we have that we are below this red line here at 4562.5, and that we just closed also below. So that's for me indication that we might see further downside. That's a good indication. That we're not done yet going lower. We have a lot of gaps here as well, so we might see a price reach up into gaps to go even lower. We have, so sell side liquidity here is taken, so I remove that. We have a 5-minute gap here. My gut feeling tells me that we're not done yet on the downside. So let's see from this. I want to measure. So from this gap here I just annotated on a 5-minute chart, I want to see how, if we would enter a short here, which I don't feel so comfortable because we have already taken the low out. I wanted to see our stop would have to be 9 handles, that's a lot. So I don't really want to take the trade now, even though I think it might go lower, because our high probability target is gone already. The liquidity has been taken out already, and the risk reward is also not very good. So maybe not comfortable to stay on the sideline because I got the analysis right and I wanted to be in a trade. But it's better to stay out at the moment than taking an unnecessary loss just because we missed the first high probability trade, which has already unfolded. We had a fair value gap entry just here, so on the 3-minute there's another potential trade entry. However, the stop would have to be above the second fair value gap, so this here, trade entry, the risk for this trade here, entry at the top of this candle's high at 4559 is still almost 9 handles, which is a lot. Stop would have to be here at 4568.5, so that's too much for my liking, especially because the high probability target is gone already. We have a potential downside target of 5 pips, so also the risk reward is not good enough. We have sell side liquidity here. Below this 1 hour low, 4545. So if we really go lower, this is a potential draw. We might Need to be nimble on the 1 hour chart and consider this the half of this wick here of the candle of November 30, 12 o'clock. So I would take partials at least at 48.25 prox eyeballing. And so first target hit, second target basically, or the second area of interest reached. And now let's see if we can still get our third level. Still looks bearish to me. And on the 3-minute candle, the premium arrays are being respected. So this gap here, let's change the gap here so that you can see what I'm referring to. So I am referring to this area and price. Shaded here from the low at 4561.5 to the high of 4559. So this area shaded here, that's one gap. Let's see if we respect this gap and go lower from here. That could have been a potential trade entry going lower. Besides that, nothing I want to really do at the moment. We're too much in a discount to enter a trade here, and the risk reward ratio is not good enough in my opinion to enter a trade right here. We can check the dollar index in the meantime. Let's see what we have here. Dollar index has resumed higher from here, went higher from here, took out short-term liquidity above 103.72 and might go higher. So dollar index looks like had a punch up here, took out the liquidity here, but there's nothing really to outline on dollar index in my opinion at the moment. It looks very, it's exactly in the midpoint of this range. So if we look at the range from here to here, we're exactly in the midpoint, or pretty much in the 50% area. So hard to outline what dollar is going to do on a longer term basis. Not really helpful in my opinion, the cross analysis. And also Nasdaq had a pretty significant retracement, took out highs last week and is now back in this weekly and also daily gap, I guess. Yeah, daily gap. So we are back. We have retraced into this gap here. Let's see if we find nice equal lows here. So really nice run on liquidity here. Let's see where it might want to reach for. Okay, liquidity basically taken, and in this gap now here. So also not very helpful for this session in my opinion right now. Might want to go lower and fill in more of this void here. So might want to retrace deeper into this gap, but not an area where I want to take a short. So also Nasdaq not really helpful in terms of this trading session at the moment. Back to our S&P. Nothing new yet. We might form a 15-minute fair value gap here. What I would observe next is if we trade, if this 5-minute gaps here acts as resistance, or if we stay below and go lower. And once the candle here, the 50-minute candle here closes in about 20 seconds, we have another potential gap formed. I will also observe this going forward. At the moment it seems like it's still below this 3-minute gap, but the higher time frame the gap, the more influence on price it has. So the more important the gap is to consider. So now we have the 15-minute gap formed here. I will annotate it here quickly. So this is a gap I'm watching to see if it. I will take this gap away now as well. To have a better view, visibility, and I'm watching this 15-minute fair value gap if we find support here and or if we go lower. And we have a 5 minute. We can actually refine this gap here because we have a 5 minute gap here. So we refine this, and same for this 5 minute gap. We will see if price respects the gap, this shaded area. I don't want to see it ideally trade above it or close above it. Ideal would be if we just touch the low or stay and close below the midpoint of the gap. That would be ideally to see further lower prices. If we do not respect the gap, we might want to go back into the opening range gap for now. My gut feeling tells me that we are not done on the downside yet. I think we might see lower prices. However, I don't think we will get another high probability trading setup this session. So my personal trading session ends at 11 o'clock New York time. I don't think we will have a high probability trade forming in this session. The one I would have liked is again the 5 minute fair value gap here. Let's make it visible here. The one I would have liked would be this one. We have a 6 handle stop, and we have a downside target, yeah, of almost 10 handles, so 10.5 handles. So that would be a trade I would have taken, I would have liked. We have a risk reward ratio of 1.5, which is okay. We have a high probability liquidity target, which was not rated yet, or was not rated at that time, and we have a decent stop with 6 handles. That would have been a nice trade in my opinion. Everything now after we took out the liquidity here is not so favorable anymore because we're a pretty deep discount, and we might see some consolidation here or even a retracement here before doing anything else. If we go lower, it would be favorable to see not a big retracement up. It would be favorable to see if we just stay in this consolidation and just stay heavy and go lower without any further retracement. That would be the most bearish scenario here, if we just stay here and go lower from here with no big retracement to the upside, and basically leave the gap open here. If we can leave this, if we leave this 15 or 5 minute gap open, that's a bearish sign, so that would be ideal for everybody who is short. So yeah, that's so far that's favorable for lower prices. A retracement into this gap is possible, but it's better. The bias is more bearish if we leave this gap open as a breakaway gap And again, gun to my head, I think it's more probable that we'll see lower prices than higher prices in this session and today's price action. We can annotate our liquidity real quickly from last trading session so that we can also see why I picked the stops, the low here. From 9:30 to 12 o'clock, the New York morning session from Friday, the highest high is not here, but kind of here, and the lowest low is here, and that's another indication that this liquidity here is a very high probability draw. And we can also look at the 5-minute chart to annotate the other sessions as well. Another influential area is $130 to $4 We can see that has been taken out already. But what's nice to see is that our trade entry from the London morning session is basically retracing back into the low. So as I already mentioned one time, so the low of these previous trading sessions, if we break through them and we retrace back to the low, that's kind of a nice resistance level. So we can see here price returned back to this area, traded into the fair value gap here, and went lower from there. So that would have been the nicest trade, entering at 345 here and targeting the sell side liquidity here down below for 30 handles. So that would have been the nicest trade if you would have been up already at that time. I slept in, unfortunately, and was not able to participate. If I'm able to get up, I like to trade the London AM session as well, which is from 3 a.m. to 4 a.m. New York time. So what I like now is that we have, as I said, we have not went back up into this gap here. So this 5-minute gap and 15-minute gap stayed open so far. So that's good for everybody who is bearish, in my opinion. And I think we can reasonably expect a more downside to 4551.5 from here. Ideal would be also that we that this consolidation here stays intact, that we do not take this out. It might do it. We might see a stop run taking out this liquidity here and then resume lower at a later point as well. But ideally, we have a balanced price range here. So you can see we have the candle here at 10:30. We have a price action to the left and price action to the right. There is no gap. It's very efficient delivered here. So for a high probability scenario, it would be nice if this area stays intact, if this lends support going lower. So far it looks good. However, at this point we need to be careful. We need to be very careful if we take new short positions, because we have taken out the high probability liquidity and we are in a deep discount already. So taking a short right here is not as ideal as previous. And we have just 3 minutes left. 3 minutes left in our session. I think we will close shortly because there's nothing I wanna act on right now. Maybe I'll be back for trading in the New York PM session. So at 2 o'clock New York time, I might be back for a personal trading session, but no live stream. At the moment looks good. We're heavy. And we still make lower lows. As long as we make lower lows and respect premium arrays, we can expect lower prices. We are below the mean threshold of the order blocker outlined here. We have, I think, also, we have not closed now, but about this red line, 4556.75. If we close below this area, it's further indication that we see lower prices from here. All right, I think 1 minute left. I think I will close soon. I hope you liked the session. I hope you got something out of this. Not sure if we had a lot of viewers, haven't checked, but if you like the stream, if you like the analysis, and if you like that we continue going forward, I would be very happy about a like and a subscription of this channel. And again, Mint Markets FX, our channel. Feel free to subscribe and like, and also feel free to follow us on our Twitter page, Mint Markets FX. We will share links here, and I will give updates about live streams and also trades, demo trades we're taking. And yeah, I will try to do a stream almost every day as long as my personal life allows it. And I hope to see you again at the next stream. Have a pleasant day and see you tomorrow, hopefully.